Okay.
So far, so good.
I can hear both of you.
I can hear both of you.
Hey.
Okay, for those of you that are waiting for the webinar, we clicked the start broadcast button early because in the past we've had some problems with the webinar seizing up, so we seem to be doing all right. We will wait until 8 o'clock to give everybody a chance to sign in, and then we'll get going. We've had, let's see, if I look down here, we got 111 people that have registered for the webinar. We'll see how many people show up. There's only a few online right now, but so.
All right.
No, it says down on the corner, live now. Okay. So we'll just kind of wait a little bit here, a few more minutes.
And Ron, I'll upload my slides maybe in 2 minutes or so, or press open. Yeah.
Well, at 8 o'clock, I'll put that thing, the screen for the volunteer search up there.
Okay.
And,
okay.
And then after, when I'm done with that, then put your slides up there.
Okay. And how do I sound as far as just smooth sound, no echo?
No, you sound fine.
Okay. Yeah, you guys.
I don't hear any echo.
Good.
Yeah. Yes. Yep. I got a message from Randy on audio.
Yep.
Yep. I'll try to get people to use the question format. You know, the December webinar, the one thing about Webinar Ninja is that you can continue to register and look at the webinar even long after it's finished. We had between 20 and 30 people that night, but the figures on the December webinar is almost 1,600 people registered for it.
Wow.
Yeah. So over time, you know, it stays there, kind of like social media, kind of like a video on Facebook. It stays there, and you can go back to it and watch it anytime.
Nice.
Yeah. Okay, we've got a few more people logging in. You typing?
No, not me. I hear that too.
I can hear the typing.
No, stop.
Okay, I'll turn my mic off.
Yeah. Elaine's being productive. No wasted time.
Aha, I see.
Look at your chat, guys.
Oh, yeah. She's sending me a message. That's okay.
Since you put the icons out, I can't mute my microphone.
Oh, okay. How's that?
That's good. Because I will mute it.
Okay, you can mute yourself now.
All right.
Well, it says it's 8 o'clock. Think we should wait a little longer? Another minute, maybe?
Well, let's go.
Okay. Well, I think we'll get going here. Welcome everyone for our Fairtex webinar, our quarterly Fairtex webinar that we're presenting every 3 months. It's hosted by the Florida Fair Tax Educational Association, but it's available to anybody with a computer, completely free. The presentation will be done by Jay Wally, CPA from Colorado, and recent fair tax expert. And my wife, Elaine, and I will be in the background available to answer any questions when necessary. There is one, yes, I have to do an ad. Sorry, folks, but I have to do this. This one right here. Okay, the Americans for Fair Taxation are looking for volunteers. Well, should I say they're looking for a few good men or women? Okay, AFFT is offering opportunities to work on tax reform at the national level. The following areas are where you can help influence national tax policy. They need a creative content specialist, prepare visual and text for memes to be used on social media platforms, prior use of PowerPoint or Keynote or some kind of a graphics compiler is necessary to format and finalize. We need video and graphic specialists, somebody that can prepare audio and video segments for posting on YouTube, Facebook, and Twitter. An engagement specialist, monitor and respond as needed to Facebook and or Twitter messages. The volunteers with the AFFT do their best to monitor those sites and reply to questions quickly. We need people who can educate but advocate when appropriate. And it would be nice to have one specialist in each time zone.
What I'm doing here on mine.
And then what is it? How do I get it? Oh, they give me the webinar.
Editor for Facebook pages.
/webinar.
Is somebody having trouble logging in? Okay. Anyways, editor for Facebook and a booker or media placement specialist. We're looking for somebody, the AFFT is looking for somebody that can search out interview opportunities, broadcast, internet, podcast, YouTubes. There's so many platforms out there where people have shows. And we need to get some of the fair tax people on these shows, wherever they are. Broadcast radio, TV, on the internet, on podcasts, on YouTube, wherever they are. So those are the positions. They are volunteer. Everybody in the Americans for Fair Taxation and for all the state groups are all volunteers. There are no paid positions in these for these organizations. So anyways, and with that, I'm going to turn my mic off and turn this over to Jade Wally. Let me, okay, turn the mic off.
All right. Thanks, Ron. Start on slide 2 here. Everyone, just wanted to say welcome. Thanks for participating today, getting to learn a little bit more about the fair tax, taking time out of your evening, and to otherwise support us here. So the format, we'll go through presentation here today. You can ask questions at the bottom of the screen. We prefer you post questions, and we'll try to actually answer those as we go. As Ron mentioned, Ron and his wife, Elaine Malero, are here to help and can either chime in with answers and or answer questions, as well as Randy Fisher, 3 folks who know the fair tax inside and out. You can also use the chat feature, but we prefer, if you can, to use the questions feature at the bottom of the page. And moving on now, let's get into our agenda. So today we're going to talk about the fair tax. We're going to take a few minutes, and because this is a fair tax webinar, we're going to talk about the fair tax and what it entails, just as a brief kind of reminder as a foundation for then going into our topic of the evening, which is what would life really be without the income tax, and maybe covering some of those aspects, and then we'll get into some Q&A at the end of the session. So what are the principles of the fair tax plan? The fair tax creators based the fair tax system on the following principles. The fair tax was supposed to be simple, fair, voluntary, transparent, border neutral, and industry neutral. A key concept here was that there were no favorites and no winners or losers. A key tenet of the fair tax is that it is fair. This means that items taxed are only taxed once and only ever once. And so if you buy a new item and pay the fair tax, when you sell it as a used item, the new purchaser doesn't have to pay the fair tax, and you as a seller of a used item don't have to collect the fair tax. So what is the fair tax? We're going to cover the bullet points you see here on the slide. First of all, it's a national consumption tax. And this national consumption tax, that would be the fair tax, actually broadens the tax base from $5 trillion. And so I'll give you a little color. $5 trillion is the amount of income left over that gets taxed. And you say, what do you mean left over? Well, the actual income in America is closer to about 10 trillion. But after income to arrive at adjusted gross income, call them AGI adjustments, as well as deductions, you get closer to 5 trillion base. So almost half of all the income escapes taxation, and you get a lower base relative to a $9 trillion consumption tax base, which is actually much more stable when you look at decades of US income versus PCE. And PCE is just personal consumption expenditures. And so there's scores of empirical data that show that personal consumption expenditures, consumption, is actually more stable than income over the years. The great thing about the fair tax is that based on the core principle that there's no winners and losers, and there's no exclusions from our nation's consumption of new goods or services, except for one thing, higher education, which is deemed an investment and the sole exemption out of the entirety of the fair tax. So it's a national consumption tax on the purchases of all new goods and services, currently estimated to be at a 23% inclusive rate, so it's included in the price of everything you buy, in order to be revenue neutral. So that means it's not a spending reduction plan, but simply a different and more efficient way to bring in the same Treasury receipts that are currently collected under our U.S. income and payroll taxes. So what we mean by inclusive, if you think about the federal gasoline tax that's already in the pump when you pay it, you don't even see what it is, but it's included in that $2.59 per gallon or whatever you're paying at the pump. Now, although the fair tax is revenue neutral to our U.S. Treasury, it drastically reduces, if not almost entirely eliminates, the nearly $700 billion of annual illegal tax evasion that we experience under our current income tax system based on current published IRS data. We'll discuss how a little later. So, second bullet, income taxes are eliminated. There are no more income taxes for individuals or corporations. This means that there are no individual or corporate income tax returns to file and no consumer record-keeping requirements, no more shoe boxes full of receipts. The fair tax replaces about 96% of current federal tax receipts. Certain things like that federal gasoline tax we mentioned aren't included, but virtually everything is as far as our Treasury receipts. Specifically, it eliminates and replaces the income tax, the corporate tax, the AMT, the death tax. In more civilized circles, this is referred to as the estate tax, capital gains tax, self-employment tax, gift taxes, and FICA, that Social Security and Medicare tax we pay in our paychecks, which are actually the most regressive tax of all and have the horrible effect of hitting the working poor the hardest, while the wealthiest among us, those not earning a paycheck with a W-2 each year, but living off of investment capital gains, like a rich investor such as Warren Buffett, for example, who they don't pay one dime into Social Security or Medicare currently because they're not an employee for anyone. And over 40% of all our tax receipts in our U.S. Treasury come from the payroll tax, meaning almost half of our Treasury is based on the most regressive of all tax schemes imaginable, hurting our working poor head on. Next, the fair tax involves a prebate. So what in the world is a prebate? The first argument you hear against the fair tax when people hear it's a sales tax is that it must be regressive and it's going to hurt the poor, meaning that a flat sales tax rate is much harder to pay for the working poor relative to people who are wealthier. Well, let me address this head on. The fair tax is not regressive. It includes a monthly prebate to all U.S. citizens, reimbursing them for the fair tax spent on the basic necessities of life based on annually published U.S. DHHS poverty levels. That's the Department of Health and Human Services. They publish a poverty level rate each year for the U.S. Alaska and Hawaii get a different rate because of their locales. For example, based on the 2019 DHHS poverty guidelines, $33,820 is the annual poverty level for a family of 4, which means that with your prebate under the fair tax, you'd get $7,779 back this year, which is 23% times 33,820. And it'd be refunded to you in advance, called the prebate, back to that family. That'd be $648 a month at the beginning of the month, direct deposit upfront to reimburse that family for the fair tax they'll pay that month on their expenditures up to the poverty level. So they're effectively untaxed for spending on the true necessities of life. This is similar in concept to a standard deduction, but works even better. And when you dig into the fair tax plan's research studies, the prebate actually makes the fair tax more progressive. Say that again, more progressive than our current graduated income and payroll tax systems. When you crunch the numbers, and I've looked at the studies and it's math, and it's true, this means the effective rate of tax you pay on your consumption gets higher and higher the more you spend, the richer you are due to the prebate. Although the fair tax is a single 23% inclusive rate, the prebate injects an incredible amount of progressivity into the fair tax consumption rate structure. Embedded taxes. What in the world is that? The fair tax eliminates embedded taxes that have been ingrained into the cost of every good and service we purchase and consume every day. A study undertaken by Dr. Dale Jorgensen, the head of Harvard's economic department at the time, concluded that, on average, about 22% of the cost of everything we purchase, goods and services, is made up of embedded taxes along the way. What does this mean? A few examples are, for example, when an employer must pay 7.65% FICA match for every employee's wages that they pay. Sometimes we forget that the FICA tax we pay each paycheck is also mandated by the income tax code to be matched by our employers. So it is another cost of doing business that gets embedded into the cost buildup of whatever product we buy. Also, consider the federal income taxes that corporations pay. Again, another cost of doing business that gets ingrained in the total buildup of costs that they then add on their profit margin to determine the final retail consumer prices we pay. At the end of the day, the studies showed that depending on the industry, around 22% of the cost of what we pay at the register is embedded taxes. Those get wiped away with the fair tax. The elimination will also make our U.S. goods much more competitive abroad and help reduce our trade deficit. We'll go into more detail on this concept a little later. With competition in efficient, or at least semi-efficient markets, prices will come down drastically. Some espouse that companies will just pocket the extra profits with all these costs being eliminated from their cost structure and not pass along the savings associated with paying no federal income tax, no FICA employer matching tax, and prices won't drop at all. Economic principles and history prove this perspective dead wrong. The great thing about capitalism is competition, and with competition, it's all about market share, and companies will do whatever it takes. If they think they can profitably take it, they will. Now, will prices come down 22% on average? There are some studies that believe that prices might come down a little less than 22%, since employee wages are sticky things, as Alan Greenspan famously once said. This gets a little deep, but what this means is that since individuals will now pay no income tax or payroll tax withholding, in theory, we as employees could all offer our employer our labor at a lower salary or wage, which would be some portion of the 22% price drop expected by the Harvard economic studies. In actuality, prices might only drop 15% rather than 22%, given the large portion of labor that remains in many industries that still represents a tremendous drop in prices for the new goods and services we consume. So, who pays the fair tax? Everyone in the U.S., whether we are citizens visiting here for tourism, legally immigrating here, or staying here illegally. We in the U.S., if we spend money on new goods or services, again, whether we get our income from legal law-abiding salaries and wages or underground illegal and otherwise nefarious means, we in the U.S., when we consume, pay the fair tax. Well, what if I buy used goods? Well, good question. A key tenet of the fair tax is that it is fair. This means that items are taxed once and only once ever. So if you buy a used car, you're not paying the fair tax. If you buy a used home, and by the way, in 2017, 88% of all home purchases were used, you don't pay the fair tax. How is the fair tax collected? It's collected by vendors at the retail level only, just like they currently collect state sales taxes. Currently, 98% of the U.S. population pays state sales taxes in their respective states. It's 45 of the 50 states. Vendors then remit their state sales taxes to the state sales tax authority. But now, not only their state sales taxes they would collect, but they'd also remit the federal fair tax collected, but keep 1/4% of those funds as a collection fee. For example, if you collected $1 million and remitted it, you'd keep $2,500 for your efforts as a vendor. The states then remit the federal fair tax collected to the U.S. Treasury each month, and the state keeps 1/4% of these funds as a collection fee for their efforts. Compare this to the 155 million individual and 100 million business tax collectors that each one of us are currently tasked with being under the income tax system. I'm not sure about you, but I don't ever recall being entitled to a collector's fee for the thousands I send to the IRS every year. The vendors collect the fair tax at the register, and the Fair Tax Act specifically calls for the amount of the fair tax to be specifically delineated on your receipt, so you can always tell how much tax you're paying with the fair tax. And I suppose if you were so inclined, you could save all your receipts and calculate how much in federal fair tax you paid for the year. But the great thing is, you don't have to under the fair tax. There will be 250 million people in the U.S. paying the fair tax almost every day. And yet, the payment of your fair share of the federal income tax burden will be completely anonymous. If there are any issues with tax remittance violations, the vendors are the ones who have to answer, not the consumer. With the fair tax reimbursed for your necessities needed to survive and live, thanks to the prebate, your true unreimbursed federal tax expenditures are finally voluntary rather than compulsory. The fair tax only taxes us at the retail level where new goods or services are purchased or consumed. So this means that of the approximately 100 million total U.S. businesses, of which around 2.5% are retail, that means only 2.5 million businesses out of 100 million would need to collect the fair tax. This then also means that the vast preponderance of businesses have absolutely no tax compliance costs, no tax burden, and no tax remittances whatsoever. Sounds too good to be true, right? Well, how would this not add to our deficit? The key is the tax base. $9 trillion consumption tax base versus a $5 trillion income tax base. Income comes from income, one source. Spending, consumption comes from income, savings, borrowing, and even theft for the underground economy. After things are stolen, they consume. It's a much more extensive taxable base. That's the secret. The underground economy, illicit crime rings, gangs, and illegal businesses, the oldest profession in the world, for example, as well as people in the U.S. illegally who don't file federal income tax returns now, they would all be paying their full federal burden now when they spend and consume, another key aspect that broadens the base under the fair tax. And finally, to avoid the potential of both a sales tax and an income tax, like many European countries, the Fair Tax Act specifically mandates that the 16th Amendment, that allowed the income tax in the first place, must be repealed within 7 years after the fair tax becomes law. This must be a separate legislative process because a constitutional amendment requires 2/3 of the House and Senate to pass and 3/4 of the states to ratify. So it can't be a part of the Fair Tax Act, if you will. So now let's imagine, what would life really be like under the without the income tax? So we'll be speaking primarily about life without this U.S. income tax system, but occasionally we will, by necessity, be utilizing the ideal U.S. income tax replacement, the fair tax, when comparing what life would be, one, without the income tax, and two, with its logical successor, the fair tax. So first, there will be no more payroll tax withholding and no more income tax, corporate tax, AMT, death tax, capital gains tax, self-employment tax, and gift taxes. All this gets eliminated from our lives. There'd be no more IRS, no more need to specify the number of withholdings your employer each year tells you to specify on Form W-4. No more waiting in the mail for your annual employee W-2 with your gross wages and tax withheld data in order to file your annual income tax return. You're not filing income tax returns anymore. No more individual, corporate, S-corp, partnership, estate tax, gift tax returns ever. The amount of paper printed out draft after draft of corporate and individual income tax returns each year could stretch around page by page, lined side by side around the earth many, many times. This also means no more IRS audits. The gentleman on the slide would be supremely thankful. He looks scared there. The annual IRS budget, $12 billion, completely unnecessary now. In 90,000, anywhere from 90,000 to 100,000 IRS employees would no longer be needed. No more IRS abuse, including civil asset forfeiture. There are 200 pages of IRS instructions for Form 1040 alone, not including schedules. Over 4,500 IRS tax code changes in 10 years. 4,500 changes in 10 years. That's 450 changes a year, or over one change per calendar day. On the IRS website, there are over 2,000 form publications to download. Not forms, publications. The 1 million in daily IRS database system hacking attempts. That's right, the IRS database gets hacked or attempted to be hacked 1 million times a day. That would cease. It's no longer needed. And the related data privacy concerns would be virtually eliminated. For example, in 2016, the IRS revealed that 1 million taxpayer Social Security numbers were stolen from the IRS database. The IRS apparently knew for years, but didn't let the 1 million Americans know until several years later. The end of the IRS being used as a weapon. The IRS has, in fact, been weaponized by both sides of the aisle. Most recently, Lois Lerner and her Tea Party group scrutiny, they were asking where their meetings, what their meeting agendas covered, the names and personal details of people on the membership rolls, and massive delays in approving the new 501c3 organizations with Patriot or Constitution in their name, etc. It's just pure across the aisle weaponization, no longer there as a tool to be used nefariously. There are a number of IRS horror stories that we simply don't have time to cover, but the Fair Tax guys, Ron, one of who's on the call tonight, along with Bob Paxton, cover many of these stories in their Fair Tax Power Radio episodes 39 and 67, if you want to really get into detail on some ridiculous horror stories. The IRS will not need to know anything about you ever again. Some things that the IRS knows about you now include, drumroll please, your income, how, from whom, and when, expenses, to whom, for what, deductions, the car, type of car you drive, how many miles you drove for work, your Uber side job mileage, charity and personal purposes mileage, your medical expenses, whether or not you have health insurance, your home size, your square footage of your home office, whether or not you own your home, its cost, its depreciation, bank accounts, your deposits, if any, that are in cash and greater than $10,000, they have to be reported to the IRS. Your interest earned and whether you have foreign accounts, your investments, your stocks, your bonds, your interest earned, dividends received, capital gains and losses, how much of your dividends are qualifying dividends, what the basis is in your various investments, etc., to calculate gains or losses when you dispose of them. Your charities, which organizations do you give to and contribute and for how much and when? And whether you're saving for retirement and college, including how much each year, which organizations, and when you withdraw that money. Your life without the income tax will not include your government having to know any of these items about you and you not being obligated to supply these intimate details to the government, much of which you likely don't even share with the majority of your family members. So let's think about life without the income tax. What would the effect be on U.S. businesses? There will be no corporate income taxes and the related costs. The nonpartisan Joint Committee on Taxation and the Congressional Budget Office have the data that show workers effectively pay 1/4 of corporate taxes. Other studies estimate workers bear upward of 45 to 75% of the corporate tax burdens. In October 2017, the Council of Economic Advisors estimated that the average household income would increase by $4,000 annually based on reducing the corporate tax rate to 20%. Another study by Harvard professor and former Reagan advisor Martin Feldstein found a 20% corporate tax rate could deliver a wage boost of $3,500 per household annually. Economists at the OECD note that the corporate income tax is the most harmful to the economy and adversely affects economic growth. Remember, corporations don't pay corporate income taxes. You might say, what, Jade? Well, there will be an enormous lobbying effort, obviously, about not reducing corporate income taxes, but bear with me. They'll hope, these lobbying efforts will hope that people will fall for this untruth that corporations actually pay income taxes. We saw it in spades about a year and a half ago when the push to lower the corporate tax rate from 35% to 21% was being debated. Businesses have a basket full of costs, be them raw materials, employee labor, payroll FICA matching taxes they pay for each employee, overhead, operating costs, and business taxes. Corporate and other business taxes are simply another cost that gets wrapped up into the ultimate retail price that businesses must charge their customers. If these costs are eliminated, the former Harvard Economics Department chair calculated on average, like we discussed, the costs of U.S. goods and services would decrease by 22%, depending on the industry. Tax compliance costs of $600 billion a year. $600 billion a year get paid to firms like mine that I work for as a CPA. These will be virtually eliminated. These costs include salaries of tax accountants, office supplies, office space, real estate, tax software systems and packages, special bank accounts, IRS audit time, and professional services firms like mine. Now, under life without the income tax, these companies' time and money will likely be spent on R&D, innovation, new products, and ultimately lower cost products and services. To cite a famous example, GE's 2011 tax return had 57,000 total pages that resulted in a tax liability of 0. Goose egg. Imagine the professional services bill received by GE to help them compile this monstrosity of a tax return. Currently, there are 100 million total U.S. businesses, but again, only 2.5% are retail businesses, 2.5 million out of that 100 million. Of these 2.5 million businesses, 15% of them, about 375,000 businesses, make up 90 to 95% of the sales of all goods and services. So you can see compliance costs would go down dramatically. It's only these 2.5 million businesses that are having to worry about this. Compliance costs now would only be at the retail business. And remember, 0.25% fee would be received for the collection trouble for these businesses, which also is an encouragement not to cheat. Plus, the easy report that these U.S. retail businesses compile each month is simply your gross sales multiplied by the fair tax rate that you've already collected. No exemptions, exclusions, county by county rate changes, etc. It's a simple calculation. The 8.9 billion hours Americans spend on tax compliance each year virtually goes away. Picture that for a second. 8.9 billion hours of time freed up. The effect of these businesses' costs being eliminated: 1, lower prices to consumers, like we talked about; higher wages to employees; higher investment returns for owners, such as higher dividends and distributions for everyone's 401ks and Roth IRA accounts; and 4th, higher investment in the business, such as R&D and other innovations and inventions and ventures to hopefully make our lives better. As of July 2018, over 3,000 U.S. businesses had raised wages or given bonuses with a 35% to 21% corporate tax rate reduction. Imagine a 0% corporate tax rate. Let's talk about stability. Stability is great for business. Businesses crave stability, and the current tax code changes almost daily. The fair tax would be stable with virtually no compliance costs and no business-to-business taxes. Without the income tax, there would be an effect on retailers who primarily sell foreign goods. So let's get technical for a second. If goods are purchased at extremely cheap prices from abroad, say China, and sold at retail in the U.S., they have little to no embedded tax cost in them because they weren't produced in the U.S. with the cost of our income tax system, including the payroll tax, embedded within that end retail price. European vendors who sell products to U.S. retailers have their VAT taxes refunded to them when they sell outside their home country. So, our U.S. retailers who purchase from European countries are in the same competitive advantage over goods produced in the U.S. that have, on average, a 22% embedded cost of taxation included in their end cost. Given this, life without the income tax, replaced by the fair tax, would almost certainly bring detractors from certain large retailers and manufacturers that don't produce American-made goods or sell American-made goods. Also, when our American goods are sold abroad, they're currently disadvantaged with this 22% embedded tax cost built into their ultimate selling prices that do not get refunded when they leave our U.S. shores. The fair tax is a carrot, not a stick, to keep our U.S. companies from moving abroad and or buying more foreign goods over U.S. goods. Without the income tax, the cost of companies' lobbying and PAC contributions would decrease significantly. The cost of lost productivity and the opportunity cost of time and effort can now be employed to solve problems, expand a business, cure cancer, or invest more time with your wife, children, friends, and coworkers. The effect on lobbying inside the Beltway in Washington, D.C. would be tremendous. The income tax code is the second most lobbied area in Washington. And there's about 12,000, ballpark lobbyists in D.C. It's about 22 lobbyists for each member of the House and Senate. The number one lobbying effort is pharmaceuticals, but the tax code is a close second. As far as lobbying multinational corporations, they spent over $14 billion over the last decade. Lots of campaign donations and contributions with quite a bit of maneuvering all around tax code. No wonder there was more than one tax code change per day with the tax system over the past 10 years. The last Congress, the 115th Congress that ran from early 2017 to early 2019, there was 2,000 tax code changes proposed. And this was the year of our largest tax code change that was supposedly reformed since 1986, but still 2,000 tax code changes proposed. What a waste of time in Congress and lobbyists with all these tax code changes. All that would go away with the income tax being eliminated for the life and the enactment of the fair tax. So what about the effect on individuals? First of all, the prebate. Is the prebate an entitlement? Sometimes that question will come up. And so I'll answer that by saying, well, yes, the working poor and really everyone are entitled to decide whether their paychecks are used for family, kids, food, milk, diapers, medicines, before the government automatically and regressively takes 8% out of every worker's paycheck, no matter how much or how little they're making. The prebate changes the game for the working poor. U.S. workers will now keep their entire paycheck. That means no more FICA, federal, Medicare, and Social Security tax withholdings. You keep your whole paycheck. The working poor will have their biggest tax reduction in history with the elimination of the payroll tax. And make no mistake, the payroll tax is a tax. The Supreme Court ruled that withholding is a tax and not an insurance policy or a contract. Because I think Ron and Bob and their Fair Tax Power radio broadcasts always like to say, what's your policy number, or where's your contract as far as your insurance goes, as far as paying that FICA and Medicare. Embedded costs being removed, like we talked about earlier. These embedded costs go away, so the prices go down on average up to 22% for everything we buy, depending on the industry. Again, wages are sticky things, so it might go down slightly less. But the ultimate result of replacing the income tax with the fair tax is that consumers will still pay the cost of U.S. taxes with the retail products and services they buy. It's just that they can see it now by law on their receipts, as opposed to it being embedded and shrouded in mystery, inefficiency, and unnecessary costs along the way. In total, though, there are three primary drivers as to how your personal spending power will change under the fair tax. First, you'll keep your entire paycheck. Second, you'll receive your monthly prebate. Third, prices of new goods and services will decrease by they'll increase by the fair tax we pay at the register, but in a large part be offset by the elimination of embedded costs from the prices of everything we consume. The sum total of these three aspects results in disposable personal income. And again, this is based on Harvard Economics studies and other studies by PhDs in their field. Disposable personal income increases 2% in year 1 and 9% in year 5 after fair tax enactment. So personal disposable income is really what's left in your pocket after paying for your necessities and after paying your taxes. It goes up. After 5 years, 9%. That's a huge increase to what's in every American consumer's pocket. Imagine the economy. Real wages increase 10% based on these studies. The U.S. GDP increases 2.4% in year 1, and by Year 10, it increases 11% annually after fair tax enactment. Imagine the heated economy with 11% GDP growth. We'd actually have a problem of having to keep our economy from being so overheated. But again, that's a good problem. Interest rates will go down by 25%. So if interest rates are 4%, 25% brings it down to 3%. That's a big difference. That affects individuals and businesses, given the elimination of the embedded costs for banks. The natural tension between rewarding savings and investing and consumption will continue to exist. Interest rates dropping 25% will be one of the biggest catalysts for borrowing and related consumption by consumers to increase. When savings increase but interest rates decrease, there will be a natural offsetting effect of increased borrowing and consumption. Long story short, it balances out and the market finds equilibrium there. The uber wealthy, under the income tax, the uber rich pay zero Social Security and Medicare tax. No FICA is withheld from investment income, and these folks aren't earning a W-2 salary or hourly wage anymore. With the fair tax, they're funding Social Security and Medicare with every retail consumer purchase. I've read the Fair Tax Act, a certain percentage, and I can't remember, maybe it's around a third of every dollar of fair tax collected goes to Social Security. It actually creates a more secure and foundational footing for those key safety nets. Currently, the top 400 richest U.S. earners pay an effective rate of 18%. With the fair tax, they'll pay more, closer to a 22.9% rate, because the prebate actually keeps it from being 23%, but it gets incrementally, exponentially ever closer to 22.99% as they spend. So this is a huge increase on the uber wealthy. The cost of education. This is one of the coolest things about the fair tax. It's cut by about 40%, nearly in half, under the fair tax relative to how we pay for secondary education under our current income tax system. Now, when we pay for college, we're using post-tax dollars, and the embedded taxes of the educational supply chain are a significant cost component of our universities and colleges that we pay for in the form of higher tuition and fees. Under the fair tax, all educational expenditures are considered an investment and are made completely free of the fair tax. This will be one of the single biggest drivers to an even more educated American workforce, which can be exported around the world to carry the torch of freedom, education, and advancement. So, what about the effect on the economy, including offshore funds? The IMF estimated in 2012 that approximately $18 trillion was hidden in offshore bank accounts. Without the income tax, virtually all offshore funds would be repatriated and put to work in the U.S. Steve Moore, a Trump advisor, was quoted as saying that this would be, and I quote, rocket fuel for the economy if this were enacted. High-level research conservatively estimates that in just several years after fair tax enactment, that our U.S. GDP would increase, like we talked about, by at least 10% annually. The fair tax rate does not contemplate this massive influx of Treasury receipts, meaning the fair tax collected would increase exponentially when our economy begins to boom at such a clip. The great thing about this scenario is that the problem that our elected officials will have to deal with is whether to lower the fair tax rate or use the excess funds to, one, balance the budget, and after that, two, begin paying down our over $22 trillion in accumulated deficit. This is what we call in the biz a good problem to have. Again, we don't necessarily trust our politicians to do the right thing there, but that's not the subject of the fair tax. All we know is the Treasury would be booming with coffers, and then it would be up to us as citizens to make sure our officials did the right thing with that money. So overall, virtually all studied economists agree that three things will provide and promote economic growth. One, replacing the income tax with a consumption tax. Two, replacing a graduated rate system with a flat marginal tax rate system. And three, lower marginal rates and a broader tax base. Like we talked about, you almost double the tax base with the fair tax. The fair tax delivers on all of these tenets that all these very well-educated economic experts agree would be great for our economy. So what about efficiency and evasion? Dr. Sabula had a 2017 study and concluded that income tax evasion, currently at $693 billion a year, but growing to approximately $1 trillion a year by 2026, is actually growing faster than the population growth of the U.S. and the U.S. GDP growth, in part due to the multifaceted gig economy that we live in, meaning multiple jobs and gigs, many of which don't have the traditional W-2, whether it's being an Uber driver, house sitting, dog walking, eBay deliverer, you name it. Society is also becoming much more cashless. This makes evasion under the fair tax even more difficult relative to the fair tax. And so what about a national consumption tax? Because we bring up the concept of evasion under the fair tax. Well, a California study on state sales tax and use tax estimated that a 2.8% evasion rate could result under the sales tax. This is perceived to be a maximum ceiling, however, because there's no use tax with the fair tax. Many of the states, one of their biggest issues is collecting on the use tax. That's when someone buys a good outside the state and brings it to consume it in the state, and technically should probably pay some use tax on that with the state. But it's one of the biggest evaded illegally state income taxes or state taxes that there is. Further, the underground economy, criminal organizations, gangs, human trafficking, prostitution, and all the horrible elements that have crept into our society will now at least finally pay their full federal tax burden as they consume and spend their earnings on new goods and services. The nearly $700 billion annual tax gap divided by the 320 million Americans, we're talking about almost 2,200 per every man, woman, and child in America every year that we're short because of taxes that aren't collected that should be. The fair tax actually, to the contrary, encourages compliance relative to the income tax, encouraging evasion. Mark Twain was famously quoted as saying that the income tax has made more liars out of Americans than golf has. Taxing income is taxing the very property of each individual, the very fruits of their labor. People will always justify evading an income tax, right or wrong, when the fruits of their sacred labor are being taxed. With a consumption tax, justification and rationalization are removed. These two concepts, by the way, are key tenets of identifying where fraud exists in a business. Because paying the fair tax is optional. Whether I buy new or used, the timing of when I buy, or if I save, rebate reimbursement for basic necessities will be tested enough in our lives. Our faith, our relationships, our integrity. The fair tax takes the hazard out of play, since we're using golf terms, as it relates to cheating and lying to this great nation of ours when it comes to paying our legal tax burden. It's simply eliminated. We discussed how out of the 100 million total U.S. businesses, only 2.5% are retail, 2.5 million out of those 100 million. And 15% of them, about 375,000 businesses, make up 90 to 95% of all sales of goods and services. Evasion will drop dramatically under the fair tax based on this fact alone. There's only 375,000 businesses collecting 90 to 95% of all our taxes. The Home Depots, the Walmarts, the Amazon online, none of these entities are going to risk not collecting and remitting the fair tax. It's just too high of a price. Lastly, approximately 90% of sales taxes are also electronic in nature now, which greatly reduce the risk of sales tax evasion. It's programmed into the point of sale terminal relative to cash businesses where a little bit more obfuscation might occur. For example, now even small businesses, I've been in the Florida Keys this week, even small businesses seem to have me sign their iPad for an electronic receipt when paying by credit card. So let's move the slide here, and let's talk about the effect on U.S. brotherly love, unity, and interconnectedness. Now, that sounds pretty altruistic here, but what are we talking about? Well, there are significant societal costs of the intangible class warfare that is waged between different sides of the congressional aisle that would go away under a simple fair tax. This class warfare, where politicians are pitting Americans against each other, is the lowest form of manipulation, and it inhibits our coming together as a nation. We may still need other help to come together as a nation, don't get me wrong, but this is a huge impediment to national unity removed when the income tax goes away. Warren Buffett is famous for saying that his tax rate is higher than his secretary's tax rate. With the fair tax, as Warren Buffett spends like a rich man, and he's known to be very frugal in his life, living in, I think it's Omaha, Nebraska. He's known to be very frugal, but he'll undoubtedly spend a lot more than you or I in his day-to-day life and pay a much higher tax rate than his secretary under the fair tax. It is really simple with the fair tax. So let's say that Warren Buffett spends and consumes $1 million every year. I'm sure it's a lot higher than that, but let's just go with that. A very conservative estimate, to be sure. And his secretary earns and also spends about $70,000 a year. Given the prebate, Mr. Buffett's tax rate is over 22% under the fair tax, as he spends $1 million. And his secretary's is 12.5%. Here, Warren's effective tax rate is almost double that of his secretary's. The fair tax summarily solves what I've affectionately coined the Warren Buffett secretarial tax rate conundrum. And say that 5 times real fast. Next, illegal residents. They won't receive the prebate, and legal immigration will be encouraged. Now, we can't seem to find a way to properly encourage legal immigration these days. The prebate is a major game changer. If folks arrive illegally without a social security number, they aren't going to receive a huge benefit, which is the prebate. And they actually end up paying more than a normal fair share to the U.S. government, because they'll finally pay their full federal burden when they purchase new goods and services in their daily lives. We're the most prosperous and blessed nation in the history of the world, no doubt. And a consequence is that significant costs and waste and low recycling rates have emerged. With the income tax eliminated, I should say, under the fair tax regime, purchases of used items will be significantly incentivized because the fair tax is only collected once when a new product or service is sold. The used market for autos, homes, and other gently used items will skyrocket, and the cost of the energy, time, and effort will be conserved at unprecedented levels, all while our environment benefits from an economy that will thrive on the highest rate of recycling ever known to humankind. Check out the Fair Tax guys, Fair Tax Power Radio episode number 69, where they go into significant detail on the positive effects of our environment that the fair tax brings when the income tax goes the way of the dodo bird. I don't think it is an overstatement to say that the fair tax would be the single largest piece of legislation that would positively affect the environment, and as opposed to economic hardship and catastrophe that a Green New Deal, did I say steel out loud? Would bring about. The fair tax would usher in more recycling of materials, goods, and items while bringing about economic expansion and growth rather than catastrophe at unprecedented levels. Finally, without the income tax, there would be a monumental effect on personal and individual freedoms and resulting trust in our U.S. government and its institutions. The Bill of Rights are currently being violated under the income tax system. And you say, really? The Bill of Rights? How can that be? There's some arcane legal concepts that bring it about, but think about it. The First Amendment, freedom of speech, and our beliefs, they're targeted by the IRS, by both parties. The Johnson Amendment by Lyndon Baines Johnson in the late 50s when he was a senator before being president, actually for some nefarious reasons of his own to silence critics, came up with what's known as the Johnson Amendment, which requires 501c3 entities to not have political opinions, stifling free speech. The Fourth Amendment, illegal search and seizure, civil asset forfeiture, which can be initiated without probable cause, is completely legal somehow, some way under the fair tax. There's a great website about money laundering called watchblog.com, and there's an April 2017 article that highlights how 91% of IRS civil asset forfeitures were perpetrated against innocent taxpayers. The problem with the income tax is they don't put an E in the upper left or upper right-hand corner that stands for evader. You just can't tell, and heck, they might not file income tax returns at all. The fair tax gets rid of this. When taxpayers' bank accounts are frozen, and although 91% of the time they're innocent, it takes years and thousands in legal representation to fight the IRS. And the IRS has legal representation that is paid for by the very taxpayer that they're harassing. it's an abomination. The Fifth Amendment, due process. You can't be deprived of life, liberty, and property. Not true with civil asset forfeiture. They don't have to have a reason. Your bank account can just be frozen with no notice to you whatsoever. You just show up and you can't withdraw your funds. Amendment number 6, jury by peers. In the tax court, you are deprived of the constitutional right to a jury by your peers. Under a life without the income tax, all of these abominations where the Bill of Rights have somehow been skirted go away. And under the fair tax, they're not needed. And so I'm going to go into conclusions and Q&A, but I was going to ask if my nephews are still around. I'm here in the Florida Keys, and I've got nephews that are respectively a senior in college and a junior in college at the University of Wisconsin, and they're coming in here now. Zach and Josh Hassman. I'm very, very proud of them. They're both mechanical engineers and immensely smarter than their Uncle Jade. But I wanted to ask you two, since we're here, how would you like, if you had, when you go out into the real world, and Zach, that's going to be you in a couple months here as an engineer, having the annual consumption allowance, that's the prebate, for you of $239 a month as a single adult, where you get that directly deposited in your bank account every month to reimburse you for the basic necessities of life, or at least the tax paid on those basic necessities. How does that hit you?
Yeah, I mean, that would be absolutely huge, especially as I start coming into the year, you know, as I just start working and I don't have a lot of money, right, coming in. I'm going to, you know, student loans and everything, and I'm making it try to last to the very last day until I graduate and I get that first paycheck. But if I were to get that prebate, that would just be huge. And, you know, just helping me get through those first couple months as I become a real person here, and I'm no longer in college anymore.
I think you're a wonderful real person already.
Well, thank you.
Well, Zach, Josh, any questions about the fair tax? Now, to the audience out there, I have taken their time by force, you can say, and sometimes when we'll have an hour drive somewhere at Christmas break when we all meet up, and we'll drive someplace to duck hunt or something, and I'll bend their ear on the fair tax, so they know a little bit. But what are some of your biggest questions?
Well, I mean, you explained it really well with everything, and I think part of it that doesn't bring me to have any huge questions is, like you said in the beginning, it's so simple. It's a simple way of you know, changing what now is so complicated.
Yeah.
So
that's one of the biggest aspects of the fair tax. It's meant to be simple.
I'm sure if you talked about the taxes we have now, I could list you. I could give you a huge list of questions, but really with a fair tax, I mean, the simplicity of it and all of the positives that you explained tonight, I really can't think of any overwhelming questions.
Talking about, you mentioned positives, Josh, and I'd just like to say something about that. Uncle Jade, you mentioned capitalism versus competition, and I really think you think back to 50 years ago when products were made to last for you know, life, right? And now you buy a washing machine, and 10 years later you got to buy a new washing machine, right? But that would really bring companies to make their products better and bring that value of these used products up, because people are going to be looking at that when they go to buy a new product.
I hadn't thought about that, Zach.
Yeah.
That's really insightful. That's true. So companies will be encouraged to build things to last better because of the high demand for quality used goods.
Exactly.
Well said. Well said. What would you guys say if we get this movement works and we all talk to our congressmen and women and we get the fair tax enacted, signed into or close to enacted, but a very well-intentioned politician comes up and says, you know what, but let's just exempt food and medicine. Let's just exempt certain things from the fair tax, and let's make an exemption here. And well, I had this lobbyist friend give me a campaign contribution, and he said if I exempt this, then maybe it'd be a little more fair. What should we do at that point as fair tax supporters?
Well, that's what the prebate is all about, right? You're getting all of that money that should be for those things. So that's kind of ridiculous, if someone would say that. You
hit it on the head, and plus, Ron Malera, who's on the call, he often is quoted as saying like, well, is the Grey Poupon, that gourmet mustard, is that food? Doritos chip? Well, what about beer? It just opens up the door to lobbyists in the whole system that we have now that is perhaps not what was intended by the Founding Fathers. Okay. Gentlemen, thank you so much. We're going to open it up to Q&A, Ron, now to everyone else. But thoughts, some budding young professionals. And I tell these guys, these are the engineers. I'm a service provider. These are the intelligent ones that I just end up serving as a CPA. And so these guys have promised to engage me later in life when they make millions. So.
I don't know about us being the intelligent ones, but I guess I'll take it.
Ron, let's.
Well,
what questions do we
the
have?
screen that you have up there right now partially answers one of the questions that we got in the chat session. And will a fair tax ever pass? If so, how? That's a very good question. And the graphic there. Call your congressmen and senators, write your local newspapers, media outlets, spread the word. In other words, do what you can as an individual to, one, contact your elected representatives, your congressmen and both of your senators, and let them know that you expect them to co-sponsor the fair tax legislation. In the House, it's H.R. 25. And actually, we find ourselves right now, we don't have a bill in the Senate because they're still looking for a primary sponsor, but that will be taken care of very shortly. The other thing is, because people recognize Congress is somewhat dysfunctional, and I'm being nice, okay? So maybe we can repeal the 16th Amendment, and there are organizations out there that are working to have the states conduct what's known as a convention of the states, not a constitutional convention, but a convention of the states where the states have control. It's a high bar, but if we can repeal the 16th Amendment, the fair tax will be the only game in town. So it's not going to be easy. That's for sure. Now we have some questions in the question section here. We have 4 of them. Randy types in, what is the effect of eliminating taxes on business inputs and prices of goods and services? I think you addressed that, but do you want to quickly cover that?
Yeah. So sure, Ron. On business input. So yeah, that's and maybe we're talking a little bit here about. In Europe, they have the VAT tax, and so each input along the chain of creation, you get a tax added onto it, and that builds up into what's known as a VAT tax. The great thing about the fair tax is it's one and done. It's only at the retail level. So eliminating the taxes on all these business inputs as that product, as that service is brought to market, has the great effect of lowering the cost. And so we talked about that study a few times. The Harvard Economics Department share showed that, again, it varied by industry, but let's just say 15 to 28%, depending on the industry, prices would come down. Now, again, because of that nuance, and it was brought up in the second fair tax book, because we as employees of the corporations of America might not offer our labor at a lower service because we're paying no income tax now, maybe that 22% average cost reduction is actually more like 18 or 15% reduction. So you basically have the price of everything coming down and then the fair tax added on. So prices would be pretty close to the same, if not maybe anywhere from 5 to 10% higher. And you say, what? On average, prices go down, but then the fair tax brings it up, but costs are going up 5 to 10%. It's going to be mayhem. But again, you're keeping your whole paycheck and you get the prebate. So and again, that leads to ultimately more money in your pocket. And I think, again, they call it disposable personal income. All the studies show with varying percentages, but it's positive, the effect of money in your wallet at the end of the day after you pay your taxes under the fair tax relative to the income tax.
Okay. We have another question from Ted. Higher education is tax exempt, or all education, even secondary? And I had to stop and think about that. But of course, there are private schools for secondary also. Not everybody goes to public school. So I believe that all education, including private schools, private secondary schools, will be tax-free. Yes.
Yep, and Randy answered this one, Ron. He says all tuition and fees for secondary and higher education are exempted. And this actually leads into Josh's comment down below. Josh brings up a good point, and this is one thing that I actually scratched my head about when I first read through the Fair Tax Act in the Fair Tax books. He says, well, so if higher education has been excluded from the Fair Tax, what's to restrict further exclusions, exemptions, carve-outs, loopholes, deductions in the future, say to exclude healthcare or some other social objective? And Randy answered this one well as well. But I'd say, first of all, that's always a risk. And you're always going to have well-intentioned politicians around that will try to twist the fair tax if it becomes law and turn it into something that it's not, make it less simple, less fair. And so I think Thomas Jefferson said, the price of freedom, and I think having a fair tax would be freedom. The price of freedom is eternal vigilance. So we're going to have to stay vigilant. But Randy answers Josh's comment very well and says, it would require a change of rate. So if you think about that, we have the fair tax rate, it's enacted into law. If I all of a sudden am this well-intentioned politician and want to exclude medicine, bread, milk, baby diapers, whatever else, that means my rate's going to have to go up by some mathematical percentage, 0.5%, 1%, 2%. So that means the whole nation is going to have to say, yep, I want my fair tax to go from 23 to 25% so I can exclude XYZ. And Randy says there would be pitchforks and torches heading to DC, which I think is true. It's a natural kind of natural hedge against this kind of behavior. But I think you still have politicians wanting to do this, and you'll have to guard against it. And here's the thing, and Neil Bortz describes these in the books very well. Right now, we have so much spending hidden, like through deductions or exemptions and loopholes. Now, if you want to spend money, it is just flat out in your face, transparent with the fair tax. If you want to bring in and raise taxes, everyone's going to know about it. And so that's really a great natural hedge against monkeying under the fair tax, Ron.
Okay. So this is, I have another question here. Prager University has a video, flat tax, 3.4 million views. Do we have any plans to make a video? Randy can respond to this, but I've heard him address this before. Those videos are really expensive. I mean, the PragerU videos are very nice. I've watched a lot of them. They're very professional and they're very expensive to do. And unfortunately, the Americans for Fair Taxation, the state organizations, don't have that kind of funds. We need to find a national sugar daddy to fund something like that. Yeah. But yeah.
So I think Ted was volunteering there, Ron, by asking that question. Is that true, Ted?
I'm sorry. Is that what?
I'm just playing around. I said Ted Davis must be volunteering to donate money so we can make that video.
Yeah, well, sure.
Thank you, Ted, on behalf of the entire Florida Fair Tax Educational.
Yeah. Yes, we can hope. Let's see. I don't think there are any more. Wait a minute. I see a couple of chat things here. Yes, Ted is not really agreeing with you.
Yeah. All right, Ted, I had to try. Oh, and Bill Matthews has a question here, Ron. He said, would the fair tax slow or stop illegal drug trafficking and illegal immigration to the U.S.? And do we need a wall at the Mexican border if we pass the fair tax? And I can say, I don't know about the wall. I don't know about illegal drug trafficking, but I know illegal immigration to the U.S., I think there's a natural barrier, no pun intended, to illegal immigration with the fair tax because I am like never before encouraged to be legal when I come to the U.S. Because if you think about it, illegal immigrants, folks in the U.S. illegally, will be paying a much higher rate than anyone else.
Yeah.
So when they pay that 23% rate at the register, they get no prebate. And so they get no refund, no beginning of the month check. And so they want, one, they'll be paying in filing, right now they don't generally file a federal tax return if you're in the US illegally. So one, they'll be finally paying in to the US income tax system or the US tax treasury coffers. That's one. Two, they'll be doing it at a higher rate than US citizens, which kind of seems more fair if you think about it, because maybe they skipped in line over a legal immigrant who went through the proper processes and is now receiving that prebate because they're here illegally. So I think there is a natural decrease to illegal immigration. Now there'll probably be circumstances where folks are so desperate to get here they won't mind not getting that prebate and still get here illegally. I don't think it totally wipes it out 100%, but I do think it's a natural barrier there.
Yeah, and the other point that I want to make when it comes to immigration and the progressive nature of the fair tax, I mean, with the prebate, the fair tax actually becomes progressive, not regressive. And it does it in a very simple and natural way. Right now, we have a tax code with different brackets. How many brackets do we have right now? 5 or 7? I can't even remember. And,
yeah, I think you went up to 6 or 7 for individuals. Yeah, it's ridiculous.
And so they try to make it progressive by having these brackets and having higher tax rates for higher incomes. But then Congress goes and puts all these loopholes in there, so the people in the upper income brackets can take advantage of these loopholes and legally reduce their tax burden, which means it's not progressive at all. It means that those people get breaks that other people don't. And there's a lot of wrangling, but Congress likes it because every time they do something like that, they collect campaign contributions from these lobbyists. All right. Right now, we have a very convoluted, very unfair system. The fair tax is very simple and very fair. It is progressive, I say, naturally, and it can't be messed around with. Okay, and it treats the problem of illegal immigration the same way. It's simple and it's effective. I think we've answered all the questions here. All right, I know Randy had to leave and because he's got an AFFT conference call right now, actually a few minutes ago. How about Hillsdale Imprimis? Have we tried to get Imprimis? Ooh, that's a good question, Ted. I appreciate that. Yeah.
That's a good publication. If we could get in there, and Ron, let me know. I'm happy to put together an article for that publication if we could ever get in.
That would be great. That would be wonderful. Yeah, and Ted, that is part of the problem. I said jokingly that we need a national sugar daddy. We've talked about this, at AFFT and here in Florida. We need star power. We lost a lot of ground when Neil Bortz retired from radio, because when he was on the radio, he was talking about the fair tax almost every single day. And since he retired, it's been more difficult to get the message out there. It really is. The media just doesn't want to seem to deal with the fair tax. I don't know if they haven't taken the time to study it, but just can't get them to even talk about it. So, we kind of make a joke, but at the same time, it's serious. We need to find somebody with national notoriety that's willing to take up the mantle. And that's one of our challenges. It's a big challenge, but it's one of our challenges. So let's see. Okay. I want to show that. Jade, are you done? Are you have any more slides to go through, or?
No, that concluded my prepared remarks, Ron. Appreciate it.
I want to tell people that the one nice thing about this new webinar format is that when we're done and after I click stop broadcast, the entire presentation, video and audio, will be saved as a video on the site here. And sometime in the next day or so, I'll also be able to download the MP4 and put it on the Florida Fair Tax website. Okay, so my wife is messing around with my computer here. Anyways, but it'll be here, and it will be available. It's, like I said, kind of like Facebook, where you can go back and look at a video as far back as you want. Now, I did notice that for our December webinar, we had almost 1,600 people registered, the vast majority of them after the webinar finished. So you can come back and watch this. I know I'm going to, because Jade gave us a lot of information. Some of it I found just really fascinating. I've been doing this fair tax stuff for about 10 years, and I still, every time I listen to Jade, I learn more. But there's no way I'm going to remember all those numbers. So I'm going to go back and check it out again, you know, and probably use some of this on Fair Tax Power Radio. So it's good. Anyways, let me load one last time. Oh, Bill Matthews responded to Ted's comment about imprimis. There's a group called CPAs for the Fair Tax, or something like that. I have heard of that. Jade, are you familiar with that at all?
I'm not, but I'll check it out.
Yeah, that's something. I want to put this slide up here again, right here, and put a call out to people. The Americans for Fair Taxation are looking for some volunteers that have special skills, social media volunteers, creative content specialist, video graphic specialist, engagement specialist, editor for Facebook, and booker or media placement specialist. All right. We have right now 4 of those jobs are being done by basically 1 or 2 people, and it's kind of overwhelming. And we really need help if we're going to do a great job of getting the message out to everybody. And the last one, the booker, this is really important, because this is, like I said, without Bortz on the radio, we need people that can get some of us on a radio show, a podcast. There are YouTube channels of people talking about all kinds of things, you know, in our country. There's all kinds of platforms out there that we can take advantage of if we can get some of our fair tax volunteers on there and talking about the fair tax. So take a look at this, and I think that's about it for the evening. Like I said, this broadcast will be recorded, and it'll be on this website, webinarninja.com, and you can come back as many times as you want and replay it, because there is a lot of information here. And then I will get the video file, and I'll put it on the Florida website, which is flfairtax.org, flfairtax.org, and you click the button for the webinar, and it'll be there. It'll probably take me a couple days to get there, but it will be there. And so it'll be available forever and ever. So I want to thank Randy. He's already had to leave for his conference call, and my wife, Elaine, and especially Jade. Again, you've done a fantastic job. Lots of good information. And I could just, as you were going through some of this stuff, I'm thinking, oh yeah, that's going to be on Fair Tax Power Radio one of these next time. Yeah, this is good information. So I believe we've handled all the questions, and yep. How about presenting these volunteer openings as internships? So you can get, you can call them whatever you want. If you got somebody that's willing to do it, I think that's a good idea. So, yep, that's that. I'm going to present that to Randy. The nice thing about this webinar is that these questions will stay here too. And so we can refer to those later. But that's it for now. I want to thank everybody for taking time out of their busy schedule to sharing this webinar with us. I hope it was meaningful to you and a good use of your time. And we will be back in 3 months. I don't have the exact date in front of me, but and Jade will be doing another one, and we've got 3 months or at least 2 months to figure out what the theme is going to be. So you can send it. And oh, by the way, you can reach the Fairtax guys at thefairtaxguys@gmail.com. thefairtaxguys@gmail.com. And you can reach me directly at ocalafairtax@icloud.com. ocalafairtax@icloud.com. And that's it. Jade, is that it?
That's it. Thanks, Ron. Thanks, Elaine.
Well, thanks so much. Great job as usual. And good night, everybody. Thanks so much for being with us. Bye-bye.